from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Asian stocks join a global rally as optimism grows that the war in Iran could soon come to an end. President Trump signals the US aims to end the conflict within 2 to 3 weeks, while the Wall Street Journal reports the UAE is lobbying for a military coalition to forcibly reopen the Strait of Hormuz. Plus, OpenAI's valuation tops $850 billion following its largest funding round on record. So let's take a look at these markets then. Boy, are they confounding. This April 1st, we have seen a massive rally in the previous US session. The stocks, for example, was up 6.25%, Mike 7 up 4.5%. A huge tech rally. Obviously, the S&P 500 also rallying as well, up 2.8% in the session. That said, today we have crude oil still higher. Now it's below 105 a barrel on that better sentiment yesterday, which started with a little bit of a trickle on the Wall Street Journal report, but then sort of gained steam throughout the day as the Iranian president came out and made some comments that were interpreted as conciliatory, even though it's not clear Iran is changing its position. And then into the evening, when the president said within 2 to 3 weeks. Still, there are many thousands of troops in the region. The 10-year yield down another couple of basis points today at 428.89. Let's take a look at futures and see where we're headed for the April 1st session. In Europe, it looks like we're going to be massively rallying off the back of yesterday's rally, and Nasdaq 100 futures also pointed higher, gold gaining for yet another day. We're close to 4,700 an ounce now. Do want to point out Ed Yardeni saying that he will cancel his call for a correction if indeed the president declares mission accomplished when he speaks Wednesday evening in New York time. At the same time, he reserves the right to change his mind as often as the president does, and I think that is perhaps a little lesson for the markets. All right, your risk events on the radar today. At 10 a.m. UK time, we get euro area unemployment data. That's for February. 1:30 p.m. UK time, we get US retail sales. That's also for February, but we also get ISM data from March later in the day. And then we have some central bank speakers today. The ECB's Piero Cipollone speaks, and the Fed's Alberto Musalem. Donald Trump says he expects the U.S. to end the war in Iran within 2 to 3 weeks. His comments suggest the U.S. has largely accomplished its mission and military goals in the region, including the regime change that it had sought.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
For more, I'm joined by Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Laura, the president also indicated a deal might not even be necessary for the war to, quote-unquote, end, potentially leaving it up to other nations to resolve issues in the Strait of Hormuz. If he's intending on this ending within 2 or 3 weeks, why not pull out troops now? Why are there troops still there?
It is not clear. You know, throughout this entire process, Trump has really kept his options open, pushing for a deal, but also continuing to build up military assets in the region. This is what we heard today is both the most specific timeline from the president about when he wants this conflict to end, but also, you know, the latest iteration is what has been a series of shifting goalposts of what he sees as success and what he sees as the U.S. goals in the region. You know, he indicated that he thinks that the military operation is in its ending stages. He says he's satisfied with the regime change, which is really not whole-scale regime change, but sort of new people moving into some of those top jobs in the government. But what's not settled, and one of the issues that has been at the foremost of Trump's mind in recent days, is the Strait of Hormuz. He's now suggesting that he's going to withdraw militarily from the region, leaving the discussion and the negotiations and even perhaps even some sort of military fight over who controls that strait, that really critical waterway, to allies in the region and in Europe.
So we do get this speech tonight, the White House saying the president will address the nation to provide an update on Iran. I mean, what do we expect might come out of it? He needs to say something hopeful to the nation at least, right?
Yes, this is a relatively rare address for the president to call these primetime addresses. These are typically more somber occasions, and generally the president will read more from the teleprompter versus speaking off the cuff, as he really likes to do. And it tends to be a shorter speech with a specific message that he's there to deliver. This announcement of this came just a couple hours after he said he wanted to wrap up this military campaign within 2 to 3 weeks. So one can anticipate that this will sort of address what he sees as the next phase of the war, what he sees as the objectives. But a lot of this really remains left to be seen. Trump has set these deadlines, 2 weeks out for lots of things when it comes to geopolitics, when it comes to foreign policy, also when it comes to domestic matters, and repeatedly not met those. So he may be setting up a plan for what he sees happening over the next 14 days. But people are watching very closely about if this is something that the White House will actually keep to, or if this is yet again sort of an evolving process that could change at any given day.
Yeah, the market's certainly looking for clarity before the long weekend. Laura, thank you so much. That's Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Euphoric reaction on Wall Street on signs that the war in Iran is nearing its end. More than 3/4 of stocks on the benchmark S&P rose as oil prices fell, and that sentiment is continuing into the Asian session. So let's get an update now from Winnie Su in Hong Kong. How goes it, Winnie?
Yeah, morning, Bonnie. As you mentioned, it is a very nice rally that we're seeing in Asian markets, from stocks to currencies to bonds. And here you're looking at MSCI Asia up more than 4%. And that is a rebound from the worst month since 2008. And actually the biggest intraday that we saw since a year ago. And here leading gains, you can see that Korea's Kospi index up 8%, as well as Japan's Nikkei 225 up more than 4%. That's also helped by some better than expected data from the Tankan survey, showing that business sentiment remains very solid in Japan. Now, overall, it is a relief rally that we're seeing. However, it's worth pointing out that trading volume on these benchmarks actually remain below 3-month average, and analysts telling us that this also shows that investors lacking conviction in terms of the sustainability of this rally, especially ahead of Trump's comments. And also, we are also closely watching how this war can potentially end. Now, you flip the board and take a look at the tech sector, because that is really leading the rally today, with Samsung and SK Hynix both up double-digit today. Now, it is that overall risk on sentiment, but adding to that, you've also got data showing that memory product pricing rose in March. And also, you've got NVIDIA investing $2 billion in Marvell Technology, as well as OpenAI also completing its biggest funding round. So lots of optimism back in the AI space as well. Back to you, Vani.
All right, we'll see how long it lasts. Winnie, thank you so much. That's Winnie Su in Hong Kong. So those gains in Asia then, as we've been saying, following that rally on Wall Street, a massive rally with traders piling into U.S. equities after signals that an end may be in sight to the Iran war. Let's bring in Bloomberg MLive strategist Mark Cranfield. So frenetic buying, it just accelerated throughout the day, Mark. I have to ask you, it didn't exactly come out of nowhere, but is it completely justified and can be expected to continue?
There's going to be a lot of investors here who've got doubts about what they saw last night when they stand back and reflect. It was the last trading day of the month, indeed the last trading day of the quarter. March was a horrible month for US equities in particular, and so it wouldn't be too surprising that there will be a lot of short covering on the last day of the trading, particularly when there was some sound bites from Donald Trump which sounded as though he's getting closer to an exit from Iran. That's exactly what investors wanted to hear. As you heard just now from Winnie, trading volumes in Asia today, the first day of the new quarter, although markets are higher, trading volumes are relatively low. And we're not seeing any follow through at all on S&P 500 and NASDAQ futures in Asia. That's a bit worrying. That means that when we come into the US session later today, traders will probably be a little bit defensive. They'll be waiting for that speech later in the day on television from Donald Trump. If there is not a clear, he may well talk about wanting to end the war in a short period, but unless there is some clarity on when the Strait of Hormuz is going to be running freely, investors will not be that impressed. Treasury yields have come down a little, but not that far really. The US dollar is still pretty strong, and oil prices are continuing to go back up. All of those things suggest there's a very high bar to convince long-term investors to pile back into US equities just yet. There could be some disappointment before the end of the day. This doesn't look like it's anything much more than a big knee-jerk short covering rally. It could well be it unravels pretty much as quickly as it started. The signs are not that optimistic. Even though it's a big rally yesterday, the signs are not that great when Wall Street trading gets underway later today.
All right, Mark, we are hearing you and taking that position in mind. Mark Cranfield, strategist at Bloomberg M Live, with some warnings there, essentially. The UAE is preparing to help the US and other allies open the Strait of Hormuz by force, according to a report by the Wall Street Journal. The move would make it the first Persian Gulf country to actively engage with Iran. Let's bring in Bloomberg Horizon's anchor, Jumana Bercetchi. Jumana, how serious is the UAE and how exactly could it get involved?
Well, there's something interesting that has occurred in the last 24 hours, Vonnie, which is that the White House and President Trump himself seems to be delinking the war objectives in Iran from the reopening of the Strait of Hormuz. And that came up once again yesterday when he delivered those comments as well. The expectation is that somehow the Strait of Hormuz will end up getting resolved. And the question here is, does it get resolved diplomatically, or will there be some sort of military solution in order to reforce or force open the Strait of Hormuz? Now, Wall Street Journal reporting overnight that the UAE are weighing up or considering to get involved militarily, and by putting forward or lobbying for a United Nations Security Council resolution that would actually authorize such action. And we're hearing echoes from the likes of Bahrain that also would perhaps subscribe to such a motion if it does indeed go ahead. Of course, a big obstacle to cross when it comes to the UN. But in terms of the UAE itself, I think, if you listen to the comments that have come through from officials the last couple of days, their patience is increasingly running thin. They have likened Iran's grip over the Strait of Hormuz to economic terrorism. They said that no individual country should have this much authority or control over the passage of a key energy choke point throughout the rest of the world. And then equally, the UAE, let's not forget, has received the lion's share of all the projectiles that have been launched from Iran during the course of this war. Yesterday was one of the highest targeted days that we've had in a couple of weeks, with over 60 projectiles launched towards the UAE. That is continuing this morning as well. And so from their perspective, certainly there is a sentiment that something needs to be done to, one, restrain Iran, but also ensure the free flow of energy and energy products through that Strait of Hormuz. Wall Street Journal suggesting that they may be looking to get involved militarily as well.
Yeah, and then, Jumana, we can't ignore the fact that there continues to be attacks on the region, a drone strike targeting Kuwait's airport, for example. Can you give us the latest on these strikes?
Well, ongoing strikes and counterstrikes. As you say, another key fuel depot facility was struck by Iranian drones. This was in Kuwait in the early hours of the morning. So once again, airport infrastructure, fuel depots have been targeted. We're hearing of special passageways that are being formed, routes between Kuwait and Saudi Arabia for any Kuwaiti nationals looking to get evacuated. Saudi Arabia themselves also intercepting several drones in the early hours of the morning. Here in the UAE, too, air defense systems being triggered by incoming projectiles. And then in return, the Israeli military have also put up a comment, quite a lengthy comment this morning, talking about all of the military actions that they have executed since the beginning of this war. They say more than 800 Air Force attacks have been carried out, 16,000 different munitions, and they have targeted more than 4,000 sites. And overnight, what we understand is central Tehran was once again hit. The reports coming from Iran that it was indeed residential areas that may have been hit as well. But the latest reporting suggests that more infrastructure, including steel plants in Isfahan and at Farakshar, were also hit too. So infrastructure is still very heavily featured. And let's not forget, even though President Trump is giving this 2 to 3 weeks time frame to end the war, we also have another deadline that we're coming up to, and that is on April the 6th, the other deadline that President Trump suggested for Iran to come to the table and negotiate a deal and reopen the strait. Otherwise, the U.S. might instruct the Department of Defense to go after key Iranian infrastructure, including those power plants as well.
Exactly. What happens to that deadline? Is it suddenly nullified if the president is expecting to be out 2 to 3 weeks' time? Questions that remain open. Bloomberg Horizons anchor Jimana Bersetti, thank you so much. Still ahead, France and Japan sidestep global trade disputes, reportedly agreeing a rare earths deal. More on President Macron's visit to Tokyo later. But first, OpenAI's valuation tops $850 billion after a massive funding round involving the likes of Amazon, Nvidia and SoftBank. More next on its plans for all that cash. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. OpenAI has closed its largest funding round to date as the company pushes to acquire more chips, data centers and talent. For more, let's bring in our Asia tech correspondent, Annabelle Jewellers in Hong Kong. So, Annabelle, we're talking more than $120 billion now in terms of funds raised, valuation north of $850 billion. I mean, do these numbers make sense?
Well, I guess they do make sense in the context of this being a huge milestone for OpenAI, but it is something that they've been really working on for months now. So, yes, I mean, it's coming across against that backdrop, of course, around we've seen lots of fears around bubbles and whether these sorts of valuations were looking sustainable. But just to get into the details, so the bulk of the financing is actually coming from Amazon, Nvidia and SoftBank. So these were the names that had already been much discussed. It is interesting as well when you break it down because Amazon's investing the largest portion at $50 billion. $35 billion of that, though, it is notable, is contingent on OpenAI. Either it needs to go public or alternatively it can reach the technical milestone of artificial general intelligence. So that's obviously quite a feat if it were to happen. Nvidia and SoftBank looking at $30 billion each. So that takes us to about $110 billion. The remainder, $12 billion of the funding came from a long list of other prominent backers, including Andreessen Horowitz, MGX, that's the Abu Dhabi fund, D. Shore Ventures, TPG, T. Rowe Price, others. So yes, certainly amount of capital that OpenAI says gives it a lot of flexibility, but the pressure is very much on the business now to really prove that it has the revenue generating potential, which at this point in time is around $2 billion a month.
Meanwhile, another investment on the part of Nvidia into a fellow chip maker, Marvell, $2 billion. Why this investment, Annabelle?
Yeah, so these are actually two chip companies. They have different parts of the tech stack that they focus on. So Nvidia, of course, is looking at GPUs for AI processing. Marvell, on the other hand, looks more at connectivity, custom silicon. So that's sort of the different parts or the focuses for the businesses. But why exactly? Well, the rationale for Nvidia is that as early as last year, we saw them talking about wanting to broaden their ecosystem, opening up as well their technology or ecosystem to other rivals, and that included Marvell. So we already knew these plans were in place, but actually the companies are looking at working together as well on a technology called silicon photonics, and that is essentially technology that has the potential to speed up or scale AI infrastructure by speeding up data transmission using less energy. So you saw that market reaction there. Clearly, this has been seen as a boon for Marvell Technologies, and the CEO actually gave an interview to CNBC, but spoke about essentially how this partnership is not a zero-sum game. It's not Marvell or Nvidia. As I said, it's really about trying to broaden that ecosystem and reach more customers.
All right, Bloomberg Asia tech correspondent Annabelle Jewellers, thank you so much for all that context. Coming up, Jamieson Greer says the summit between Presidents Trump and Xi remains on track. More from our exclusive interview with the U.S. Trade Representative next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The U.S. Trade Representative Jamieson Greer says he expects relations between the U.S. and China to stabilize over the next year. Speaking exclusively with Bloomberg Surveillance, Greer was asked whether President Trump's upcoming trip to China could be postponed again.
Is there going to be a delay in the meeting? I haven't heard talk about that, neither internally. I didn't hear that from my Chinese counterpart when I talked to him last week.
When it comes to the tariffs right now, there's Section 301 tariffs that you're looking into when it comes to China. And we've seen China actually have their own announcement that they're going to investigate U.S. companies. This tit for tat we might see in the trade between Beijing and Washington, back to where we're almost what it feels like a year ago. Do you think that's going to hinder the U.S. from getting back to the 20% level they were at before IEEPA was struck down?
I don't think so. When you look back to the Busan agreements, the agreements we achieved with the Chinese last year, we were seeking stability. We were seeking to achieve a level of tariff application on one side and a flow of rare earth minerals and things from the other side. Both sides want stability. Both sides want to see continuity. The Chinese know that the United States is trying to control for our giant trade deficit we've had with China for a long time, which went down by 30% last year, by the way. So I don't think it's going to...
Right, but China's imports to other countries into the United went up, and then those countries are importing to the United States. Don't you have an issue with transshipment at the moment? So
there's always been an issue with transshipment, but when you look at our shipments from third countries outside of China since April, right, since Liberation Day, that deficit has gone down by 17%. So while there may be some transshipment, overall our trade deficit is going down. It's going down with China. It's going down with the rest of the world. It's going exactly the right direction. At the same time, wages are going up in America. Productivity is going up.
Do you think you're going to get to the 20% level?
Well, I can't prejudge the investigations, right? It's Section 301. We have to go through the legal process. We have to collect information. It's quite public. It's quite transparent. We know what the nature of the deal is that we struck with the Chinese. So we will see. All I know is that the president, for sure, is going to keep protecting our economy. He's going to protect our producers so we can continue to have increased production in the U.S., increased wages here.
If China plays hardball, though, not just with their own investigations, but potentially bringing rare earths back into the foray. I know they have basically till October. There's a deal on the table. Potentially then, would you look to maybe decrease the tariff level?
Well, from our perspective, we're looking for stability. We're trying to we're trying to get the trade deficit reduced. We're trying to increase manufacturing in the United States, and we're trying to increase real wages. And all of that is happening. So we don't see a need to change our policy. The Chinese want stability. We want stability. I actually see a positive agenda with China going forward, where we learn to manage our trade with each other, where we pick the kinds of things we want to be selling to each other, things that are mostly non-sensitive, to avoid some of the national security elements that prove challenging in negotiations. I see stability with China over the next year.
U.S. Trade Representative Jamieson Greer speaking exclusively with Bloomberg's Anne-Marie Horder. Now to some other top stories we're following this morning. The ECB President Christine Lagarde is said to have challenged U.S. Treasury Secretary Scott Bessent's optimism that the economic fallout from the Iran war will be short-lived. Sources say it happened during a meeting of high-level G7 officials after Bessent played down the damage. Lagarde is said to have warned that the effects will be felt for a long time because so much has been destroyed. The Greek stock market has been upgraded to developed market status by MSCI, marking a milestone in Greece's recovery from its debt crisis. It was demoted to emerging market status at the height of the crisis in 2013. The reclassification, due in May of 2027, is expected to widen the pool of capital available to Greek companies. The U.S. president will attend the Supreme Court later today to hear oral arguments on his bid to end birthright citizenship. Donald Trump is trying to block guaranteed U.S. citizenship for the children of undocumented immigrants, arguing that the 14th Amendment was designed only for the children of freed slaves. Coming up, the swing in oil prices continues. We'll take a deep dive into the oil market reaction to President Trump's suggestion that the Iran war, at least on his side, could be over in a few weeks. That's next. This is Bloomberg. From London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Asian stocks join a global rally as optimism grows. The war in Iran could soon come to an end. President Trump signals the U.S. aims to end its conflict within 2 to 3 weeks, while the Wall Street Journal reports the UAE is lobbying for a military coalition to forcibly reopen the Strait of Hormuz. Plus, OpenAI's valuation tops $850 billion following its largest funding round on record. So let's take a look at these markets because, boy, were they confounding yesterday. We started off with a little enthusiasm and that just gained steam throughout the day until we had literally frenetic buying towards the end of the session. Brent crude, sure, down. It's down to, below $105 a barrel. So that's about $8 lower than it was just a couple of days ago. But that spread to WTI has really narrowed. There's just $2 in it at the moment, and both are higher today. We also have the 10-year yield down, but just again, 2 to 3 basis points. So just creeping ever lower as investors maybe pivot a little bit to considering growth implications. Now, whether or not this rally continues, there are also other factors to consider, including longer-term damage, right? Not just to infrastructure, but also demand destruction. Let's take a look at futures, because we could be in for another up day. After yesterday, we saw the Mag 7 rally 4.5%. We saw the SOX index up 6.25% yesterday. Investors were just ready to buy those dips. And gold, another day of gains for gold there, very close to $4,600 an ounce. It does look like futures are pointed higher, particularly in Europe, where there's a catch-up to be played, right? So this rally did start a little bit yesterday in the European session, but it was more so after that when President Trump said in the evening time after the U.S. close that 2 to 3 weeks was his now time frame for this war to end. Ed Giardini, by the way, saying that he's cancelling his call for a correction in U.S. stocks and he's back to his previous call, but he reserves the right to change that once again if the U.S. president changes his mind once again. Time now for your front page news. Let's start with a Wall Street Journal exclusive, which says the UAE wants to force Hormuz open and has started a campaign to persuade the U.S. and its allies to open the waterway. The FT splashes on Donald Trump, saying the U.S. could withdraw from Iran, quote, whether we have a deal or not. And finally, Le Figaro says French peacekeepers with UN forces in Lebanon find themselves caught in the crossfire of clashes between Israel and Hezbollah. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBgo. Oil prices then edging higher once again as traders weigh ongoing supply disruptions, with the Strait of Hormuz remaining effectively closed to most traffic. This comes after U.S. President Donald Trump signaled U.S. involvement in the Iran war could end within weeks. Joining me now is Stephen Stepchinsky, Bloomberg's Asia Energy team leader. So, Stephen, we did see a drop. It was the rollover of the contract yesterday, too. How much faith do the markets have in this 2 or 3 week deadline and what it actually means for the oil market?
I think the prices speak for themselves. I think if you were to see an actual end or an actual off-ramp that the oil market believed would happen, you would see prices really fall quite significantly back at least to the $80 or $70 levels that we were at weeks before. Instead, we're still above $100. While these are levels that maybe don't indicate that the market is quite in crisis, they're not the levels that we see, jet fuel or other kind of products. It still does indicate that there isn't, that the oil market is no longer really moving as sharply based on what the Trump administration has said. There have been a lot of sort of oscillating statements from Trump himself as well as officials as to whether they're going to accelerate aggression, have boots on the ground, forcibly open up the Strait of Hormuz, leave allies to opening it up, as well as when exactly does the war end. 2 or 3 more weeks kind of goes on the upper end of what he was saying at the beginning, which could be a month or 6 weeks. And the market is now looking at how long this continues. And even if there was a de-escalation, how long does it take for Hormuz traffic to resume back to normal? There are a lot of unknowns still here.
Yeah, exactly. And so does volatility stay with us? Are these moves going to stick around, these dramatic moves, Stephen?
I think the one thing that we need to see when you're talking about sticking around and long-term ramifications is what is the risk premium now going forward for the oil market, even if there is a peace deal, even if Hormuz does open, because now the market will be on edge. They're going to have fresh memories of an escalating attacks, of infrastructure being attacked, of ships dealing with higher insurance rates, of ships being struck. The Houthis are now back in the mix, potentially also adding to that risk premium, not just in the Strait of Hormuz, but also the Red Sea potentially. So all of those details are going to have to be priced into oil. I think when you talk to analysts, when you see what people are saying to us, both analysts and traders, it does seem that there will be a sort of a higher price level going forward. It's unlikely that things will go back to $60 Brent like we were earlier in the year. Potentially, things will be elevated. Will they be above $100? Maybe not, but it is something that the market is going to have to digest going forward.
Absolutely. Stephen, thank you so much. That is Stephen Stapczynski, Bloomberg's Asia Energy Team Leader. Bloomberg understands that Europe has enough jet fuel to avoid shortages in April, but that could change in May as the war in Iran rocks global energy markets. In a social media post, Donald Trump lashed out at nations that, quote, can't get jet fuel because of the Strait of Hormuz. He advised them to buy from the US. The European Union and the UK are net importers of jet fuel. The effective halt of shipments through that key waterway is pressuring the region's supplies. France and Japan are poised to strike a deal to diversify supplies of rare earths and other critical minerals. This, according to the Japanese newspaper Nikkei. It comes as French President Emmanuel Macron arrives in Tokyo to hold talks with Prime Minister Takaichi under the cloud, of course, of the conflict in Iran. Bloomberg's executive editor for Japan and Korea, Kazunori Takada, is in Tokyo. So, Kazu, what are we expecting from today's meeting? What deliverables will we see?
The situation in Iran, particularly around the Strait of Hormuz, will definitely be a key discussion for the two leaders when they meet today. The two countries are expected to sort of show encouragement about how they're interested in doing what they can to help resolve the situation. But both countries also are bind in that they won't be really able to sort of do anything proactive in the Strait of Hormuz militarily until the conflict there ends. In addition to that, the two countries are expected to talk about strengthening their military ties further, potentially reviewing laws that would enable them to hold trainings in each other's countries. According to the Nikkei this morning, the two countries are also expected to sign some deal around rare earth development in southwest France. This is the project led by the two countries, both public and private. And if all goes to schedule, that output from that excavation site to begin around sometime middle this year. That's according to the Nikkei.
All right, we'll await further details. Thank you so much for that. That is Bloomberg's executive editor for Japan and Korea, Kazu Takada. Now, traditionally seen as darlings of the market, emerging market currencies have been upended by the war in Iran and the Middle East. The president of the Philippines, for example, has told Bloomberg that he was willing to spend a limited amount of the nation's FX reserves to defend the weakening peso against the dollar because spending more might be just futile. We've been asking analysts and fund managers whether they share this view and what the consequences are.
As a matter of policy, we defend the peso to a certain extent.
The market went into this crisis short of the dollar.
We've seen the dollar really gaining from this conflict as a safe haven.
It is liquid. That is what people want. They obviously value liquidity over returns when things get this uncertain.
Many vulnerable economies, especially out of Asia, who are so sensitive to high oil prices and to shortages as well, they have very limited days cover in terms of those reserves.
If the conflict lasts longer,
it is going to be further moves into the US dollar.
I think it would be even to be futile to try to spend all of this, all of our foreign reserves on defending the peso.
Oil prices in these local currencies are surging quite sharply.
You're going to see a significant consumer-led downturn because of higher energy costs, real incomes being hit.
Lots of countries have less than 30 days of reserves left.
Let's bring in Ven Ram, cross-asset strategist at Bloomberg Live. So, Ven, very open remarks there from many of these strategists. Even if this war, or the US involvement at least in it, does end, the impact on these countries' currencies is not likely to anytime soon. What are you expecting?
I think we should prepare ourselves. Emerging market currencies should prepare themselves for a bumpy ride from here, Bonnie. Because, the surge in oil prices is materially above what anyone had factored in. Just a couple of months ago, the investors were bearish on oil prices. We were talking about $60 an oil a barrel. Now we are almost at twice those levels, and it's a huge shock to the system. And, that surge in oil prices means a higher import bill for most of these emerging market economies that are reliant on oil imports. But what is compounding the problem, Bonnie, is the fact that these currencies have depreciated. So it represents a double whammy, not only of how oil prices surged, but the import bill has gone up considerably because the purchasing power of the local currencies has gone down. So, and all these economies, most of these economies went into the crisis with an import cover of about few months. So I think that, the longer the war continues and the higher the oil prices push up, the more unconventional will the central banks get in terms of handling how their currencies behave. Because we've already seen India impose a cap on the amount of open positions that banks can carry over. So I think that, central banks are going to have to improvise this against this situation, because as the Philippine Central Bank governor was saying, this is not a tide you want to take on when universally the US dollar is bid. So I think it's going to be a pretty bumpy ride for the next few weeks at the very least.
And not only that, Ven, but the bond market yesterday started to price in the odds of a Fed cut again, right? So that could be a further blow down the line for some of these countries. Would they be able to take that on top of everything else?
Well, I think that they're grappling with a host of issues. One is the fact that, their deficits are going to blow out, and the current account deficit is a significant driver of action in all this. And I think that, the current account deficits are likely to worsen a lot more. The trade balance is likely to worsen a lot more, and that is going to put some pressure on those currencies. But at the same time, central banks won't be able to raise rates in their response to inflation, because I think that a bigger priority for them would be growth here, because the best chips that these emerging markets have is the growth card. And if with considerable growth, if your GDP is growing 6%, 5 to 6%, I think that you can service those debts, you can service those import bills and what have you. But if you're in an environment where growth itself is threatened, suddenly the deficits will accumulate, and that will pose a bigger problem, systemic risk for these emerging market central banks and currencies. So I think that is what I would be watching in the next few months.
Ven, it's a little bit funny, right, that today is the day that we learned that Greece is finally getting rid of its EM status. That'll happen in May of next year. But it took that long, 13, 14 years for Greece to actually come out of emerging market status, thanks to the previous crisis, or a previous large crisis. Could we see the long-term effects take hold in some countries because of this crisis, just like it did with Greece, for example?
Well, I think Greece is a pretty unique kettle of fish, Bonnie, in all this. I think that they have worked tremendously hard to turn around their fiscal dynamics. When you compare Greece to what it is today, to what it was during the 2010, 2011 crisis days, I think they've come a long way, and they've been prepaying their debt, which is a fantastic sign of confidence. And if you look at Greek bonds, they've actually outperformed some of the peripheral euro area bonds. And I think that, they've hewn to their own path of policy prescription and made sure that the fiscal metrics are a lot better than they've been in the past decade or so. So I think that it is a very idiosyncratic story, and I expect the Greek fairy tale to continue in the coming months. And I think that their debt will kind of outperform the peripheral economies.
Yeah, it was for sure a marathon for Greece. Ven, thank you so much. Ven Ram, cross-asset strategist at Bloomberg Live. Coming up, Nike slumps as global headwinds darken the outlook. We'll have more on the sportswear giant's challenges. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. Microsoft is said to be in talks with Chevron and Engine No. 1 on a natural gas-fired power plant in West Texas. Bloomberg understands that the proposed plant is projected to cost about $7 billion and generate 2,500 megawatts of electricity, making it one of the largest of its kind in the U.S. In a statement to us, the company said that there is no definitive agreement at this time. Monzo is shutting down its U.S. operations and will instead focus on the UK and Europe. The London-based digital bank announced that it will stop onboarding new customers and lay off about 50 employees. Existing customers can continue to use their accounts until June. Monzo first launched in the U.S. in 2020, offering a debit card and an app. And Bloomberg has learned that the maker of Germany's Leopard 2 tanks is gauging investor interest for an IPO. Sources say the company may raise as much as €5 billion, and this could make it Europe's largest first-time share sale in years. It comes as the German government signalled last week it would buy a significant stake in the company in the IPO. Shares tumbling of Nike in the post-market after it gave results yesterday. This after a surprisingly gloomy outlook for the year ahead. With me now is Bloomberg's earnings specialist, Chloe Melly. So, Chloe, Nike's outlook deeply disappointing the market. What happened?
Yeah, it really did disappoint. We've seen that in those shares that tumbling in post-market trade. And if we look at the numbers, it explains why. So it expects sales to decline as much as 4% this quarter. And that's compared to what analysts had expected, which was a growth of 2%. So we can see that big gap there that explains this investor disappointment. So it's facing a few different headwinds. There's really high inventories in some key markets like Europe and the Middle East. There's also this ongoing weakness in China, which is a market which has really been driven by discounts over the last few years because there's been that real kind of economic slowdown there and the deterioration in the labour market as well. And then, of course, and that is something that we're going to be probably hearing more and more from consumer names over the next few weeks and months is the disruption, of course, from the conflict in the Middle East. And that is really impacting business for Nike. And all of those headwinds have really offset what has otherwise been quite a resilient, quite a strong performance in the North American market. And so that's really reflected in those shares today.
Yeah, because CEO Elliott Hill came in, right? He was supposed to sort of turn this whole company around. And I guess, he hasn't had that much time, but there was a lot of hope that him being an insider would really help. What does it mean for Hill's efforts to turn around the business?
Well, it complicates it quite a bit. So the turnaround plan really is focused on the core business and getting that back on track and really pushing deeper into categories like running and like basketball. And Hill has said that, getting back to a really healthy sportswear category would be really key to Nike's comeback. But obviously, there's no timeline on that. There's also the need of reviving China, reviving the Converse brand, which has been really weak as well. So there's a lot of work to do. And Nike and the CEO has said that, it's taking quite a lot of time and that things are taking maybe longer than he would like. It's a complex task, but that the foundation is stronger. So we'll see what happens. But in the meantime, this is really going to weigh on Nike shares, and we might see some of that read across as well for European sportswear stocks like Adidas, like Puma. So we'll be watching for that today as well.
Yeah, it'll be fascinating to see if there are things in common between all of the sportswear makers. Chloe, I know you're going to be watching European chip shares today as well, particularly after that massive rally. I mean, the SOX is now positive on the year by something like 7% when we were flat literally 2 days ago.
Yeah, absolutely. So we'll be watching some of those chip stocks in Europe today. Names like ASML, like Infineon, like other semiconductor names, and they have been having a very tough time over the last month because of the war in Iran, because of some of those concerns. But now that possible end to the war, into the conflict in the Middle East, is leading some of those chip names to potentially rally. We've seen that with Asian chip stocks, and so we'll be watching for any positive moves for those names in Europe as well this morning.
Right, and then will it continue into the Thursday session? Because yes, it is a holiday shortened week, but there's still another session after today. Bloomberg's Chloe Melly, thank you so much for setting us straight on all of those market moves. Plenty more coming up. Do stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's have a look at some charts that show us a little bit of what went on yesterday, right? Because it was a fascinating trading day, one we'll likely be talking about for some time and using as a benchmark, just like we used the day after the so-called Liberation Day tariffs as a benchmark. So this is the TIC index, the New York Stock Exchange TIC index, at its highest level ever. This will illustrate a little bit the frenetic pace of buying, just accelerating throughout the day. And of course, with that came the crushing of volatility. So we had the VIX index above 30 at the beginning of the day and then below or around about 25 and change at the end of the day. So a massive move lower for the VIX index as well. We'll see what happens today. Of course, everything seems to be volatile these days. Let's look at Treasuries. Speaking of which, they've been a little more stable, though those yields have been coming down. As you can see, Treasury bearishness did pair some of that bearishness yesterday. So we did see a little bit more optimism coming back into the Treasury market. I will say, though, the swaps market still has about 6 basis points of cuts priced in for this year. So we'll see if that holds. Certainly the Treasury market repricing on a daily basis. And then what are foreigners doing? If we look at this chart, we'll see that they were kind of exiting a little bit before the war began, but that has just accelerated. And they basically have been fleeing, as we have put it, Fed custody, but essentially just dumping some treasuries for various different reasons, no doubt. All right, well, you can access, search and save all of the Bloomberg Terminal charts used on this show and across Bloomberg TV. Terminal subscribers can just use the function CHRT TV Go. Now, there are some other risk events on the horizon today, not least it being April 1st, so we need to keep an eye out for anything that might be considered an April Fool's prank, right? But at 10 a.m. UK time, we get euro area unemployment. That's February data. Then at 1:30 p.m. UK time, we get US retail sales. Again, February data. A little bit later on, though, in the afternoon, we get PMIs out of the United States. And then we do have some central banks speak today as well. The ECB's Piero Cipollone speaks, and also the Fed's Alberto Musalem is going to be speaking. And later this morning, we're going to be discussing the succession challenges at Banca Monte dei Paschi with CEO candidate Luigi Lovaglio. You don't want to miss that interview. That's at 9:50 a.m. London time. 9:15 a.m. London time. The opening trade is coming up next. Do stay with us. This is Bloomberg.